Yeah, so good day guys. I hope you are doing fine. I hope you are great as well. So this is episode 4 of Flow series. All right. So in this episode, right, we'll be talking about frameworks, right? And frameworks does really in its essence entails entries, risk management, and structures, right? So basically, um frameworks does entails two parts actually, which is external price range and internal price range, or internal price range and external price range. So basically, I'll be using NASDAQ to do example for that, right? So now in its definition, what is external price range? External price range is a price action like this, right? You can see that it is making a significant high, right? A significant high, you know, and internal price range is just like probably, let's say, when a high or a low, the balance price. Okay. So this is external price range in its essence, right? And then we have to look for another high that does not, or a low that does not rebalance. We can call this an external price range as well because it is not rebalancing a gap. Actually, for this time frame, this low can serve as a what? As an internal price range on another time frame. You get what I'm saying now? So that's why it's always very much more accurate to use a very much bigger time frame, right? So this is another external price range. This is another external price range low. Okay. No, this one is internal because it's rebalancing this gap, right? So this is internal, this is internal, this is internal, right? You can see they are rebalancing gaps, right? So essentially, highs or low that does not rebalance a gap, that does not rebalance a gap. Essentially, this is the definition now. A high or a low that does not rebalance a gap is an external price range, and a low or a high that does rebalance a gap is an internal price range. Now, to further explain what this price actually does means, right? The definition to further, expatiate our horizon about them. Actually created them out of creativity, basically, I want a system for myself. It's very system, an holistic system that I know it's my experience, it's out of experience, it's out of knowing. It's not a belief that I was taught to see something some way. It's what I've seen, what I've experienced. You understand what I'm saying now? It works. I've back tested, I've tried it out, and it's very perfect in my view, right? So, what does external price range just entails? So, we can we have two variations of external price range, right? We have um we have parent swing high and subordinate swing high. All right. So now, from traditional technical analysis definition of a swing high, right? You can see this significant high, right? A candle to the right and a candle to the left. That's what makes a swing high. Or to further define it in a more clarity to define it in a more clarified manner, right? So you can look at this high. We have higher high and a lower high. So what does makes a swing high, or what a swing high does entails, is an higher high and a lower high. You can see higher high here. This high, this very high is higher than this, right? And we have a lower high. This high, this very high is lower than this high. So that one makes a swing high. The same definition applies to this. And the same definition applies to this. It does not matter if it does, stand lonely or it will balance a gap, but you have to look at the whole context of how the formation of the candle is, right? So this is swing high, this is swing high, this is swing high from our definition, right? So opposite for it's an opposite for a swing low, right? So a lower low and an higher low. You can see this is a lower low. This low is lower to the prior to this low, and this very high, we have an higher low here. This is a very, very much more deeper low, right? It is lower than this previous low, right? The preceding low is kind of higher than it, right? So we have a swing low here, we have a swing high here, a swing high, a swing high. So what makes or entails a swing low is a lower low and a higher low, all right? So we can say in its definition that this is an higher low, this is an higher low, this is an higher low, right? This is swing, sorry, this swing low, swing low, swing low, right? A swing high, another swing high, another swing high, all right? So I hope that makes sense. So this is another swing high, this is another swing high. You can see that swing high, swing low, swing low, swing high, right? Swing low, right? From its definition. Now, to further expatiate or expand our horizon about parent swinger, I said external price range does entails parent swing high and subordinate swing high. Now, this high that stand out in this swing high is the parent swing high. Now, the high to the right of it and to the left of it are subordinate swing high. So what does it mean in its context? It is subordinate to this high, and this high is subordinate to this high. It means it is a child kind of price action to this very high. So this high is the parent high because it is much more taller than this and this. So these are just like child, you know, this is just like, this is taller, this is the tallest. All right. This is taller, this is the tallest. So this is like a child price action to this high. And this is like a child price action to this high. So they are subordinate to this very high. So that's what it means. And the same thing applies to this as well. You can use that context here. But from the context of an external price range, right, we have a parent swing high and a subordinate swing high and a subordinate swing high. I hope that makes sense. It is subordinate to this high. This high also is subordinate to this high. I hope that makes sense. Now, that is the definition of an external price range. External price range, that is what creates an external price range in its essence. Don't forget, from our definition of external price range, or for an external price range to be created, we have to have a low or a high that does not rebalance a gap. Do you understand? So I hope that makes sense. So and from our definition of internal price range, we have to have a low or a high that does rebalance a gap, which is why we have this. Now, to further explain what an internal price range is, internal price range creates what we call hybrids. So whenever you see a high or a low that rebalance the gap, there are some variations or deviations that are always created in price. It is called hybrids. I named them hybrids. All right. So now this is parent hybrids I, parent hybrid I. Why? Because this high rebalance a gap. All right. Yeah, sorry. Sorry for that short break. So, so this high is what? Parent hybrid high, because this high actually rebalance a gap. Don't forget from our definition, any high that does rebalance a gap, it's creating an internal price range from its own essence, right? So this is, you have to understand. Let me give us a very, very basis of how to actually understand how external price range is tied to internal price range. For an internal price range to be created, external price range has to be established, right? And you can see here that external price range was created, price displaced lower. Now, internal price range now started creating itself. It displaced lower as well. And you can see another one here that price rebalanced and then it displaced again, right? So now there's a very, very mutual relationship between external price range and internal price range, right? They are self-coexisting. One cannot do without the other. You have to understand that. All right. So now coming back to this, this is what um this is parent hybrid high, right? This is parent hybrid high. So basically we have two types of parent hybrid high, basically, which are variations. We have efficient parent hybrid high or low, or inefficient parent hybrid high or low. All right. So now the reason why I'm saying high or low is because in this context, this is a high because we are in a downtrend. A high has to form to act as resistance for price to start going down, and a low has to form to act as support for price to start going up, right? So for this price to go, a support has to form. This is why this low holds, right? So for this price to go, a support has to form, which is why this low actually formed in the first place as well, right? So I said we have two variations of parent hybrid high. We have parent hybrid high or low. We have efficient parent hybrid high or low, or inefficient parent hybrid high or low. But in this context now, this is inefficient parent hybrid high. All right. Why is it an inefficient parent hybrid high? We have a fair value gap here. All right. We have a fair value gap here. Okay. You can see we have a gap here, but this gap was inefficiently closed. Still remains some portion that wasn't efficiently closed, right? But in its context, you will still know why this gap is not efficiently closed. And I will call our attention to that now. You can see this last two up close candle, right? So price is already pulling weight because of this. Price is already heavy to fall because of this other block here. You can see this other block that's a lot of volume compared to this. So that is why price is experiencing such an heavy weight here to fall, which is why it was very much more inefficient to close that. That is in another context to have a nice narrative to frame price for not wanting to efficiently close this price, right? So this is what inefficient parent hybrid high. All right. So in its essence as well, we have we have hybrids, and we have subordinate hybrid highs as well. This is subordinate to this parent hybrid, and this is subordinate as well. It's just like what we explained here. Don't forget the very basic understanding of what makes a swing high. All right. There has to be a high to the left and a high to the right of it. So this is a high to the right and a high to the left. And another definition that swing high does entails, right? We have to have an higher high and a lower high. You can see we have that nicely done there, and then price displaced. All right. So this is subordinate hybrid high, and this is another subordinate hybrid high, right? There are two highs and they are subordinate to this, right? They are subordinates, they are worshiping this guy because that's it is far much more taller than them, right? So this is the taller, this is tallest, this is taller, this is tallest. So it is very much more, you know, in the context of comparing, right? This is taller and this is tallest, and this is taller and this is tallest, right? But in the context of not comparing at all, right? This is very much taller than the two. Okay, so they are subordinate to it. You understand what I'm saying now? So now I explained that. So um we have deviations of these hybrids, but I will still explain that basically. But let's go furthermore forward, right? So now immediately we formed an inefficient parent hybrid here, right? You can see that these are the flaws in price action. How do you know when our price is not going to actually rebalance a low or a gap, right? Something like that. So how do you know when our price is going to fully rebalance the gap, right? You can see this upload candle is very much more bigger. So immediately price touch this, you'll be expecting some sort of, from what we've been talking about flow series, right? We've talked about follow liquidity and observe willingness, right? Follow liquidity and observe willingness. You can see, look at these lows, right? This could be looking at prior to this displacement that we have initially, right? And price stopped right there. Looking at these lows and looking at the fact that Nasdaq has been making such uh, a tremendous highs, which is basically an extreme premium for price, right? So we'll be expecting some sort of shorts in price, right? So this could be like draw on liquidity for us. So we are trying to follow this liquidity, which means we are trying to sell basically. And it does not necessarily mean that we have to look for this. This has to be tagged. But currently, price is showing weakness based of following this displacement. You can see that massive displacement in price. So this is showing us willingness to draw to a particular liquidity. So which one is the most obvious? This, of course, right? And you don't have to get to this. We have this volume imbalance. We have this volume imbalance. We have the consequent encroachment of this week, which are still, you know, which are still like I'm going to teach us how to grade our liquidity. You have to grade your liquidity in the sense that you don't have to always reach TP to be profitable trader. You understand what I'm saying now? Your price or your target doesn't have to be hit to become profitable. You have to understand that, right? As price is moving towards your target, there's going to be a lot of things that are already changing in price. And you have to always allow for that. You understand what I'm saying now? So now we have subordinate swing high, we have subordinate hybrid swing high, subordinate hybrid swing high, right? They are all hybrids because all of them rebalance the gap. So this high is an hybrid, this high is an hybrid, this high is an hybrid. So this is parent hybrid swing high. All right. So this is subordinate hybrid swing high. This is subordinate hybrid swing high. You understand what I'm saying now? So that's done. Now, price displaced lower. Most of the time, right? When you see something like this in price, now don't forget what I taught us about willingness, looking for willingness in price. Now, basically, for me, once I see something like this with this other block, right? I will be hunting these subordinates because most of the time your entry has to be here. You don't want to catch the top. The top has already formed. The parent high is already there. This is the subordinate high. So most of your entries is going to be basically on this subordinate high, subordinate swing high rather. In this context of price rebalancing a gap, it is subordinate hybrid swing high. So this high is just a subordinate swing high, rather this high is just a subordinate swing high on its own because it's not rebalancing a gap. So this high is a subordinate hybrid swing high. Do you understand now? So that's done. And don't forget what I taught us about looking for willingness in price. Now let's go to H1 to track that. Wait, I'm coming. So let's mark this high, this subordinate hybrid swing high. So let's go to H1 to look for something there. So now, looking at this high, what do we have? What do we have? You can see immediately price from the high, we have this displacement, massive displacement against price. Now, our narrative is bearish. Most of the time, you don't have to see an obvious break of structure. And that has to, I think experience is going to lead you towards that. But now, look at this last down close candle before price displaced against this high, right? So this last down close candle, you have to delineate it out, right? You can see. So price displays aggressively. This displacement, this massive displacement has already showed you that price is willing and break off this as well. So you can see where that subordinate hybrids forms, right? So if you are very afraid to take this kind of trade, right? And as you can see, there are different types of, it is still the same price action formation that is forming through all time frames, just like I'm trying to explain to us, right? So you can see this breakout was triggered here, right? So I'm going to draw it to the left hand side like this. Now, what do we have here? We have efficient parent hybrid. Why? Look at this gap, this fair value gap. It was fully rebalanced. When it was rebalanced, what do we have? We have parent efficient parent hybrid. That's what we had, right? So now you can see a high to the left and a high to the right, right? So you can see this subordinate hybrid high or subordinate swing hybrid swing high. It was destroyed, right? So this is one of the deviation from the normal way for a high to form. You can see we destroyed that subordinate hybrid high or swing high, right? We destroyed it. Immediately it was destroyed. What do we have left? We have another block, this two up close candle, right? Immediately we have that, price retrace back to the, you can see that. You can see that position. You see that position, price displaced massively, right? So that's very, very sweet right there. So you can see the essence of always wanting to catch that subordinate, right? Because that's going to give you a low risk entry. You are not trying to catch the high. You are letting price show you willingness before you do anything at all. Do you understand what I'm saying now? So that's that about that. Let's go back to daily time frame. And again, I have to call attention to this. Every of your work when you are trying to do from external price range to internal price range, it has to be higher time frame, either daily or weekly, because that's going to give you a much more higher probability of delivering to your target. Do you understand now? So now, so we have another words. We have another parent hybrid here. We have another parent hybrid here, but what type of variation is this? This is efficient parent hybrid. Efficient parent hybrid high or efficient parent hybrid swing high. Do you understand now? So you can see, why is it efficient? Because it efficiently rebalances this gap. All right, efficiently. So now, if price does efficiently rebalance this gap here, so where is going to be my target? Based on our underlying narrative, we are bearish. Now, price is still showing us this low as a draw on liquidity, right? As a very nice draw on liquidity. So now this is efficient parent hybrid high or efficient parent hybrid swing high. Do you understand now? So you can see the subordinate is intact. We have another subordinate here, and then we have the real high there, right? So you can see go to H1 to track something down from there. So I would like to, okay, wait. Let's take a, let's go back to daily. I want to draw out the subordinate high. The subordinate, okay, so that's the subordinate hybrid high. Okay, don't forget that. That's the subordinate hybrid high. So let's go to H1. So now, based on what we see on H1, so this is the subordinate hybrid high. You can see it's formed on its own and then price displaced. So now, what is this high? What is this high dealing? It is something that you'll be expecting. Actually, yesterday, I was expecting this high. right? I was expecting this high to be taken out. So now this is previous day's high, right? This is previous day's high. You can see price swept that out and did what? Displaced. Displaced. You can see that massive displacement. You can see that at every subordinate swing high, or at every subordinate hybrid swing high, that is where you want to be hunting your entry. You don't want to be catching the highs, right? Of course, if you are a perfectionist, right? If you are a perfectionist, don't, it's not good to be a perfectionist, right? Don't try to be a perfectionist, because since I've teaching you guys now, some of you might just wanting to be catching all this kind of level, and still go to another lower time frame, want to catch that as well. Don't, you have to understand amplitude in which price is going to form. All right. And higher time frame is going to give you that context of looking for the right amplitude. All right. So now you can see that coming from daily, right, which is this high down. So you can see that we have the subordinate hybrid swing high there, right? So now going to each one, price gave us the right amplitude to sell from. Do you understand now? So you can see this is not the right amplitude to sell from, right? Price retraced, but eventually went back to take the high out. You understand now? So that's not the right amplitude. So now we have another deviation here. We have another deviation on this H1. So this high, since this high is a previous daily high, right? It's a previous daily high. But during Asian, there's something that happened. You can see this is 9 p.m. during Asian. So we have destroyed subordinate hybrid high, or destroyed subordinate hybrid swing high, right? So this is very, very sweet. This is very, very sweet. So please, I'm coming. I want to go and do something. So now we have one deviation here, which is destroyed subordinate hybrid high, or subordinate hybrid swing high. So whenever you have, now let me give us this. I don't want the destroyed idea to sound very alien to us. This is just when price takes liquidity or induce a high or a low. Do you understand now? So price induced this high, but in the context of structure or frameworks, right? It is a destroyed subordinate hybrid swing high, or subordinate hybrid high to sell domination, right? And looking at this high, right? It's an hybrid. Why? Why is it an hybrid? Because it rebalances this gap before going down. So this is parent hybrid swing high, or parent hybrid high. It is either you can call it parent hybrid swing high or parent hybrid high. Do you understand now? So what do we have? We have two variations here. The first variation delivered a sell, has already served its purpose. This high has already served its purpose. That's why price came back to take out the liquidity. So what do we have here? The fact that price took out this previous daily highs, buy side liquidity, right? So this is destroyed inefficient parent hybrid swing high. It wasn't efficient, right? Price just, institutional entry deal. This gap wasn't efficiently closed, right? And it is still a previous daily high. But from the context and narrative of ourselves, we are expecting it to be taken out. Do you understand now? So that's why we had that. All right. So moving forward, we have another inefficient parent swing high, parent hybrid swing high created. You can see immediately this high was taken out because this high is inefficient as well because it didn't actually close the whole gap before it displaced massively, right? You can see. So that was actually nicely done. Price displaced nicely. All right, you can see that as well. So this idea is actually very technical, very technical. So you have to know where you have to practice over and over because they are going to validate you a very nice entry, where to get in, where to get out, where to get in, where to get out, where to get in, where to get out. Basically, where to get in. An higher time frame draw on liquidity, and your gradings. You have to learn gradings of liquidity in the sense that if you have an higher time frame draw on liquidity, you don't have to get to that higher time frame draw on liquidity before you take subsequent profits. Do you understand what I'm saying now? So I hope you all guys understand this. So we have two variations of these guys. We have destroyed parent hybrid, efficient parent. We have destroyed efficient parent hybrid. And then we have destroyed inefficient parent hybrid. All right. So like in this high now, this very high here. So we have destroyed inefficient parent hybrid high, which means liquidity was swept. Do you understand now? But to understand frameworks, you have to put it in a context or in a framework whereby you can read it as ABC. Okay, this I was destroyed. Do you understand now? So, okay, liquidity was taken. No. You have to explain it in a way that you understand. It's simple as ABC. It's just like you are reading 1, 2, 3. Do you understand now? So this is what it destroyed inefficient parent hybrid high. This very high here. And when that happens, what does it mean? Price swept liquidity. But that does not actually validate the sell narrative or context that we have going on. It is just a previous daily high being swept out. So, and again, you can see that everything is now coming together in the sense that we are going to combine higher time frame draw on liquidity, narrative and context, which entails openings and AMD, and then frameworks, which does entails external price range and internal price range, parent swing high, right? Parent swing low, subordinate swing high, subordinate swing low, and then efficient parent hybrid, inefficient parent hybrid, right? Destroyed subordinate hybrid, destroyed parent hybrid, destroyed inefficient parent hybrid, destroyed efficient parent hybrid, right? So that destroyed parent hybrid, it is actually very technical because now I'm going to show us an example of that. I'm going to show us an example of that. Let's go back to daily time frame. It is actually very scarce to see on a daily time frame. All right, very scarce. I'm going to show us something like that. Okay. All right, I see something like that finally. Yeah, so now look at this high. Look at this low right here. This low, we can't deny the fact that this low rebalance this gap. Okay. This low rebalance this gap. So what do we have there? Efficient parent hybrid low. Okay. Efficient parent hybrid low. Now, price destroyed this low. Yeah, you can see. When price came back to form relative low to it. And then here we have what? Destroyed efficient parent hybrid low. So before you start doing this different destroyed efficient low, parent hybrid low, stuff like that, you have to even first thing, you have to know where your drawn liquidity is. where is price going? You have to ask yourself, look at these highs, these slant highs. That's a draw. That's a very nice draw on liquidity. You can see immediately price destroyed that low. What happened? Price starts running, starts running, starts running. See that? That's a very beautiful price action. So that is an example of destroyed efficient parent hybrid low, right? So it has a destroyed efficient parent hybrid low. It is when price efficiently rebalance a gap and price come back to destroy the low, right? But you will understand it's something that you'll be anticipating in price. Now, if you go to weekly now, it will make a lot of sense, right? So let me delete that candles. So let's go back. Let's go to weekly now. Now, going to weekly, what do we have? It's a gap on a weekly. Does that make sense? It's a gap on a weekly. So we have what? Efficient parent hybrid. You can see how every time frame is actually agreeing. So you can see where the name flow series comes in. Flow series. Price is, piecing together to make sense of where it's going, of what it's trying to do. Do you understand now? So this was daily contest, right? Daily contest, we have destroyed efficient parent hybrid low, right? It might not be clear to us, but this could make sense of it because we have relative equal low and you'll be anticipating price to come back to on the liquidity. So you might want every other higher time frame to support this idea. Now you can go to weekly. So now coming to weekly, what do we have? So we have another weekly low, another weekly low, forming relatively equal low here. And then price came to attack that low, trading into a gap. So what do we have now? We have efficient parent hybrid low. You can see that that's very, very perfect. Very, very perfect. So daily and higher time frame are now agreeing. It's something that you'll be anticipating that you want price to trade to this and expect a displacement. Now going to H4, before this happens, this is weekly time frame, right? Weekly is showing you a gap like this and you want price to trade to it. Definitely you have to wait for a willingness for price to move higher. So now let's go to H4. Now coming to H4, what do we have? So this was the last high, like a subordinate high, right? This is like a subordinate high. And this is like the parent high on a much more higher time frame. If you go to daily now, okay, I'm coming. This is weekly. This is weekly, right? So now let's go back to daily time frame. So this is the high I'm trying to call a subordinate, okay? Or you can see this high is in respect to this high, right? Every high or a low that rebalance is very strong. So you're anticipating it to be broken for market sentiment shift or market structure shift. You do understand now? So from a weekly contest, we're anticipating a shift, which means we have to go to H4. And this high is an obvious high that is acting as a strong high. So we wanting this high to be broken, right? To be broken. So we want price to trade against this high before you have any reasonable, like, any reasonable entry that, okay, I want to do this, I want to do this, unless you've been really, really practicing and you know what you are doing in price to, in a sense, just target price to that high. But once price fully rebalance this gap, you want this low to be protected. So you can even enter right there, right? You can even enter right there, and you don't want price to come back to this, since this is a very, very can you see, since this is a swing, right? This is going to be like a swing, you know. something like this, that is your drawn liquidity. That is your drawn liquidity. And that does not mean you are not going to actually have subsequent entries where price as shows a risk-free or a least resistance of going back to the to that entry. You are going to move your entries, right? So let's play the bars. You can see immediately price has efficiently rebalanced. So we don't have any business anymore to fear this low because this low is now protected. Price has efficiently rebalanced that gap, right? So you are trusting that low. So this is a very nice 228, 2.8 weeks to reward. It's very nice in my own view. This is just going to be like, for a start, you want to see how price is going to react. Immediately price break this high. You see this retest on this high. That is a risk-free kind of trade to reach to this high. Do you understand? So you still have to frame the same whole idea of how price is going to get to this high from higher time frame draw, narrative and context, and then frameworks as well. You can apply everything. Do you understand now? So let's go back to daily. So what I'm trying to show us there is just a destroyed efficient um parent hybrid low, right? A destroyed efficient parent hybrid. But in this kind of test, it is a destroyed efficient parent hybrid low. I hope you understand that. So that is nicely done. So in episode this is episode 4. So in episode 5, I'm going to be explaining more about these frameworks, right? So but for today, I'm going to be stopping here, not to make it too voluminous for us to watch, right? So subsequent episodes, I'm going to be combining higher time frame draw on liquidity, right? Narrative and context, which entails AMD and openings, and then which entails frameworks as well. Do you understand? So I'm going to be combining everything together into an holistic approach to the market. Do you understand now? So I will see you in the next one, which is going to definitely be uh episode 5. All right. So cheers, guys.